Pro John Ag here. Get ready because silver just did something so crazy that it seems like someone hit Ctrl Alt Erase on the market. 5 days, 11% gone, and MCX traders just watched silver lose Rs 2,000 in one session. That's not a dip, it's a bloodbath. ETFs are losing $2.2 billion, yet demand for tangible goods is not only remaining steady, it's quietly rising behind the scenes. And here's the kicker. The media wants you to think that all of this is because of low demand or some undefined economic slowdown. That's not true. Damn it. A made-up story meant to scare retailers away from the metal. What's actually going on is that retail traders are stuck in a panic-selling loop, selling positions into a void, while the real players, whales, ETFs, and vault withdrawals, are discreetly picking up ounces like it's the robbery of the century. Every headline says that silver is going down. That's just a cover-up for the heist. The $2.2 billion ETF outflows? Not a sign of weakness. It's forced liquidation of paper contracts, which shift prices but don't affect the physical. What you see as a crash is only a trick of the eye. Now, put the pieces together. The open interest in COMEX futures hasn't gone down. It's still quite high, even though prices are falling. You see, the paper market is engineered to make people afraid while the smart money quietly builds up. And don't even get me started on Shanghai. The prices there are so high that they scream at you. Physical silver in the East is selling 5 to 8% higher than the NY spot price. This means that while paper contracts in the West are crashing, real metal is disappearing from vaults in Hong Kong and Shanghai. In one hemisphere, the market is losing money, while in the other, it is slowly growing. The next step is to look at the volume. You'd think that liquidity would dry up in a serious crash, right? Nope. The futures markets are still quite active, with record open interest. Someone must have left the lights on and the trapdoors open. Retail jumps right into it, believing they're getting away from the fire, but all they're doing is fueling the flames that the major players are managing. Every time someone panics and sells, ETFs get more shares, and every time someone sells a paper ounce, whales get a freebie. The big difference between retail traps and clever plays is that retail traders freaked out and sold, thinking the market was crashing because they saw red numbers. But behind the scenes, the whales are buying up physical silver and cheap ETFs like predators in the dark. Think about taking money out of a vault. Think about stealth accumulation, and think about money disappearing from COMEX and showing up in secret warehouses. You are watching the script of a robbery happen in real time. And don't even get me started on the visual clues. Red candles spilling across charts, as at the same time physical silver premiums grow in Asia. What does it mean? The metal is living, but the price you see is fake. Paper contracts restrict you from seeing the genuine flow. $2.2 billion going out? That number should make you want to sell. The truth is that the physical market is stronger than ever. This is where things become worse. Every headline in the news is meant to make you think this is normal and that this dip is just how markets work. Don't believe them. This is a trap. A trap for retailers to panic and for shrewd investors to buy at very low prices. You think the 11% drop is the story? You should wait till you see the inventory hemorrhage in the COMEX and London vaults. The real data show that physical silver is disappearing while paper continues to dance on the strings of manipulation. Every trader you see yelling silver is dying is inadvertently taking part in a staged demolition set up by the big players. ETFs moving billions, vaults emptying, and premiums skyrocketing in Asia are all signals that something big is about to happen that will change the rules for owning silver. And just when you think it can't get any weirder, the data suggests that a perfect storm of leveraged shorts, ETF outflows, and East versus West accumulation is waiting to start the next major squeeze. This isn't just market volatility, it's intentional financial warfare, and retail is the collateral damage. Do you believe this price movement is normal? Think again. The headlines scream doom and the charts are bleeding red, but the actual story, COMEX and London vaults draining while whales discreetly hoard, is just starting. And that's where we're going next. The crime scene of supply, inventory, and leverage that will reveal you exactly who is behind this planned wipeout. Vaults aren't just low, they're running out of money. The amount of silver stored on COMEX has dropped by about 75% since 2020. And anyone who looks at the data realizes these numbers aren't a coincidence. London vaults are seeing important withdrawals. Shanghai warehouses are disappearing by the ounce, and the NY paper price is still flirting with lows. Here's the kicker. Spot premiums in Asia are 508% more than pricing in New York, which means there isn't enough of it. The metal is still there, it's just not visible to the West. The East is silently hoarding it. Now, put the pieces together. Even though the price of paper is down, derivatives are still the main way prices are set. Futures contracts and ETFs are in charge of the story. The market says silver is weak, but in real life, that's not true. The leverage trap is still going strong. Retail traders have to sell because they fear the market is going down. But the real players, like banks, whales, and ETFs, buy ounces at fire sale prices. This is the purest form of paper manipulation. The price says one thing, while the real market says something another. This is where the bad guys come in. People are saying things about JP Morgan and BlackRock on the internet and in person. These big companies are said to be getting rid of paper contracts to temporarily lower silver prices, which is causing fear. In the meantime, the Fed and US banks keep the illusion going. A strong dollar, hints of rate changes, and concern about the economy all depress silver prices artificially, keeping consumers scared and obedient. Every headline that talks about silver weakness is a skillfully planned trap set by the financial elite to get people to buy silver at a low price without anyone noticing. Here is the entire consequence of the bait and switch. Regular traders panic and sell when prices drop, ETFs are sold, and futures holdings are closed. At the same time, the whales are quietly loading up on actual silver, taking it out of vaults, which makes premiums in Asia even higher. Banks don't even have to touch the metal physically. They control how people see it through paper, which keeps retail's fear in check while they command the real market. The gap between paper silver and real silver is bigger than it has ever been. Take a look at history. In 2008, gold and silver were held back before a huge QE injection that was meant to save the system while retail traders watched their positions disappear. In 2020, the FTX crash wiped out retail traders, but whales moved their money into assets that were on sale. Today's silver tale is frighteningly similar. Retail is losing money on paper, the East is stockpiling metal, and the West controls the story. It's clear that history repeats itself, and retail is always the victim. Now here's the part that really gets you mad. ETFs and paper contracts give banks a magic lever. They don't need to touch real silver to control prices. They can change supply signals, futures liquidity, and open interest to make it look like the market is weak while real scarcity develops without anyone seeing it. The real market, the one that matters, is discreetly moving into private vaults in Shanghai, Hong Kong, and London, leaving retail with losses. And the story doesn't end in the US. East is quietly taking what the West throws away. Central banks, sovereign wealth funds, and private wallets are buying actual silver at record high prices, which is taking it out of the global circulation that mainstream markets can see. The physical market is slowly moving away from paper markets, and when the gap closes, prices will go through the roof. Part 3 is about to begin, and geopolitics is getting involved. The West controls paper markets, keeps prices low, and scares retailers, while the East quietly stores metal. What's the next twist? Shanghai premiums, the central bank's stockpiling, and the quiet transfer in power that threatens the dollar's dominance. What you've seen thus far is just the beginning. The actual narrative is about to reach the world stage. But that's hardly the whole story behind the West's dumping frenzy. While everyone in the West is yelling panic, East Asia is quietly changing the rules. China and Hong Kong are buying real silver at Shanghai prices that are 5 to 8% higher than New York prices. The flows are clear. ETFs prove it. Paper is leaving the West and building up in the East, which is causing prices to diverge around the world in a way that no headline dares to describe. It's not just trade, it's a secret theft via geography. Here's the kicker. The secret buyers aren't stores. They're the people who run the game behind the scenes. Central banks, sovereign wealth funds, and even anonymous wallets are discreetly stockpiling silver. You won't see this on CNBC. Bloomberg won't tell you about it. But the vault and premium statistics scream accumulation, and those who can read it are stacking ounces like there's no tomorrow. Every paper contract traded in the West is a gift to the East, and every ETF outflow is an indication of strategic positioning. Now, think about policy changes. Statements from the Fed, a strong dollar, and murmurs about penalties are all ways to change how people see things. A signal that rates might go up? Silver tanks. What about dollar rises? Prices go down. But in truth, the East isn't afraid. They're going quicker than ever, picking up physical silver before anybody else realizes how big it is. Every change in US policy becomes a tool for orchestrated volatility, which causes panic among individual investors while strategic accumulation happens quickly but without anybody noticing. And this is the supply war that you won't see on your regular charts. Mining takes a long time. There are significant problems with production. Unlike the paper contracts that are common in NY futures, you can't print physical silver. Every ounce taken out of the West or from COMEX or London vaults makes the structural squeeze worse. In the meantime, the East doesn't only stock up, they also lock it away, which makes the supply smaller and will eventually cause prices to go through the roof. Pay close attention. Silver isn't just a metal. It challenges the dollar's dominance in commodities. In the East, physical demand and ETF flows are stealthily weakening the West's dominance. The US is trying to keep prices down with paper and stories, but the East is transferring its silver into private vaults faster to protect itself from the dollar's power. The difference is huge. Here's the open loop. Retail thinks this is a normal adjustment, but the actual conflict is geopolitical and the public can't see it. When these flows meet, West dumping, East hoarding, and central banks discreetly building up, the market will crack dramatically, and the people who own paper contracts will be the ones who lose. And that's exactly what brings us to part 4. Next comes macro doom, debt crises, Fed traps, and the price explosion that will happen sooner or later and leave anyone who bets on the paper illusion burned. We can see the global economy changing right in front of us, and the warning signs are loud and clear. And now the big storm is in full swing. The US debt is above $35 trillion. Japan's bond yields are around 0.8%. And what about global debt? More than $350 trillion. Every rate hike hints at danger. Every inflation report screams it. And silver is caught in the middle of it all, even though the paper price says otherwise. Rising interest rates, stubborn inflation, and a strong dollar all hurt all assets. But the real victims of the system are retail traders who hold paper contracts and don't see the physical shortage silently building up in Eastern vaults. The Fed is stuck, and here's the kicker. Inflation won't budge, but the markets are worried that a rate hike could cause leveraged positions to fall apart. The only answer? Print more money, fill the system with paper, and keep the true price of rare things like silver low. All the phony contracts that were canceled and all the ETF outflows that were planned are only a cover-up for the real metal that is moving into secret vaults and central bank holdings. If you have paper, you're watching a trick that you can't stop. There was no doubt about the trap. Banks, ETFs, and futures monsters control retail through paper contracts, while smart money discreetly controls the real supply. Most people can't see how rare silver is in real life, but when the East's stockpile meets the West's hidden paper, the market will explode, leaving scared retail behind. This isn't volatility, it's a planned squeeze across the whole system. What do you think the price will be? Here's the aggressive read. Silver might go up 10 to 15% once demand from the East outstrips the limited supply of paper. This is based on premiums in Shanghai, vault withdrawals, and ETF flows. And here's the ugly secret. Short-term drops will keep happening, and each one is designed to scare regular investors into selling more while accumulation goes on quietly. The next crash will set up the next big squeeze, and only people who own genuine physical silver will win. Stop trusting the banks. That's the call to action. Don't believe what the news says. Take care of your own silver and gold right now. Freedom is in every ounce you own. A written contract in an exchange is always a trap. They can change headlines and delete figures on a screen, but they can't take what you own. The lesson is hard but simple. They can remove your paper, but they can never take what you really possess. Silver is the key to freedom in the real world. Every paper contract sold, every panic-driven liquidation, and every manipulated ETF is only a countdown to the inevitable realization that real power comes from physical scarcity, not paper illusions. If you've been following the path from the West dumping, the East stockpiling, the central banks quietly stacking, and the Fed being stuck in a printing loop, you can see the pattern. The system is rigged, retail is the bait, and real silver is the way out. The question isn't if silver will move, but when and how forcefully it will change the rules for people who still believe in paper illusions. So here's the truth that no one is telling you. The silver market isn't crashing. It's being planned. Retail panic, ETF outflows, and paper liquidation are all just tricks to get people to buy the actual metal. If you still believe in banks or screen numbers, you're in the trap. What you need to do? Take charge. Keep your gold and silver safe yourself. Keep an eye on Shanghai premiums. They show where the real metal is going. Learn how to interpret paper and physical flow. This will give you an edge in a rigged system. I want to hear from you now. Are you stacking real silver or still stuck with paper contracts? Do you think the East will totally wreck the West paper markets, or is another squeeze on the way? Leave your thoughts in the comments, argue with others, and share this if you want your friends to know what's really going on behind the headlines. Last thought. The system can take away your numbers, but it can't take away your freedom. Own silver, own your way out, and see the game shift before it's too late.